Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Look at the Taiwan index, that's down 1.3%. Hang Seng is down almost 2/10 to 0.3%.
And frankly, friend has been oftentimes much worse than foe.
President Trump announces a 25% tariff on all cars which are not made in the US.
If the Nifty needs to fight back today, I think the Nifty Bank needs to play a role.
He's inclined to be more lenient than reciprocal.
23,435 first rate, 23,400. About a third of a percent down.
I think to make a short answer to the question, I think the worst is over.
There will be sort of room for negotiation and it won't be sort of implemented immediately in India's case.
We have been making about 2 to 3 million British pounds of losses every month.
The mid-cap index in the green, small cap index in the green. The advanced decline ratio is positive.
Cabinet note has been prepared. It will be put forth. It will be sent up to the cabinet for consideration and for subsequent approval.
Markets have found a little bit of steam, especially in the last half hour of the session.
Well, that is the day so far, and yes, I mean, the recovery came through initially. I mean, very, very quickly the recovery came in, and we've been trading with a 100-point gain, triple-digit gain for a while now. This is Closing Bell. We're coming to you from the CNBC-TV18 News Online studios. I'm Prashant. With me, not very well, Reema Tendulkar. Reema, hi.
Hi. But, March series, we're counting down to the March series, 1 hour to go. And it's been a series of repair, of recovery, and quite a rebound. So I was just calculating, the Nifty is up about 4.5%. The mid-cap index is up more than 5% so far in the March series.
Absolutely. And it's, the only question is just this hump, so as to speak, the 2nd of April hump, whether that is still even a factor. I think it is still a factor. We'll find out. But for now, I mean, I think the market is trading just fine. A 0.5% gain, 0.8 in the Nifty Bank. Mid-cap index is flat, almost nothing on it. Small caps are doing a little better. The Nifty micro-cap index is doing a little better. So, yeah, I mean, there is enough activity after a little bit of sort of, slow sideways down 2 days we had, which is, Tuesday and Wednesday. So this Thursday, it's looking much better overall. Nifty, the market breadth should come up on your screen as well, and that'll give you a sense of how we're looking. Lots of stories from Delhi, which we will sort of focus on in the next 60 minutes or so. So the government here in India, and actually not just the Indian government, but at least 3-4 other governments around the world are preemptively, talking about lowering tariffs on US goods ahead of the 2nd of April deadline. Our colleague Timsy has been reporting on what the plans here are, and we'll get her in just a bit to talk about it. So, I mean, I think, that is very much still front and center, whatever you say, in terms of what's going to happen when we come back next week after a long 3-day weekend. Reema.
Well, let's get to where the action is today. On the way down, it's autos and pharma. The Nifty Auto and Pharma Index is a cut of close to about 1%. Tata Motors is the top Nifty gainer, down more than 5%. Auto ancillaries are selling off. And then you've got names like Sun Pharma, HCL Tech, weak in trade. On the way up, banks are providing that support. So while the frontline indices are up nearly 0.5%, the Nifty Bank has a gain of about 3/4 of a percentage point. HDFC Bank has been a big mover on the way up. Bajaj Finserv, Bajaj Finance continuing to hit fresh 52-week highs. And Hero MotoCorp, completely domestic facing, not getting impacted by any potential tariffs. That's actually the top Nifty gainer today, up close to about 3%. And then you've got the Nifty changes, which come into effect from today, but the flows the impact of the flows will be seen today. Zomato, Jio Financial Services, remember, enter the Nifty, while BPCL and Britannia will make an exit. We'll talk more about stocks, but let's find out how you should position yourself in the last hour of trade. Mitesh Thakkar is now with us with a few closing strategies. Mitesh.
So, good afternoon. One, I think both the indices have recovered nicely from the lower levels. So I think, last couple of hours have been sideways for both the Nifty and the Bank Nifty. But my sense is that today's low could be an important marker as to, in case the Nifty chooses or the Bank Nifty chooses to consolidate. Today's low will possibly form the lower end of the range, and on the upside, the highs which you made on Tuesday, I think that could be the upper end of the range. So overall positive bias on the index, but tactically, I think my sense is that we might take a breather over here, especially to absorb the rally which happened in the last 8-9 sessions before Tuesday, and therefore I think it could be a consolidation. And idea should be if you're playing the index, then play with the range. Try to buy near the lower end of the range, which is the low today, and try to sell near the Tuesday's high. On the stock side, I have a buy on Coforge with a stop at 80.70. And here I would look for targets in excess of 82.40, 82.50 to begin with. Eventually, even I'm suspecting some more high levels. And from the banking side, Federal Bank is on the buy side. Keep a stop below levels of 190, 1.5. Look for targets of 200.
Those are individual sort of trading ideas coming through. Mitesh, just a few other names if you want to kind of weigh in. BEML is a name we've not discussed in a while, about 6.5% higher. Almost back to the high that we saw on Tuesday. Almost retraced the last 2 days worth of correction. There's a sharp spike, and I think most of it has come in the last 30-40 minutes of trade. Any thoughts here?
So BEML, in fact, it was one of the stocks which was slightly late to the rally, but today I think the candlestick pattern and the indicator setup suggests that the move has actually started today or gained momentum today. The traction has come in today, and they should see good follow through. One, I think if somebody wants to trade with a very tight stop, 28.85 is what I recommend. A deeper stop is around 2800, but 28.85 should suffice. And I think this stock, now that it's giving some kind of a reversal sign, the first near-term target is around 3100, and in a good case scenario, even 3200 can be tested.
Got that. Adani Group stocks are actually having a pretty good day. So Adani Energy is now moved to the day's high. Adani Green has a gain of nearly about 4%. Adani Energy, as I said, up nearly 6.5%. Power is up close to about 2%. So it's been a good day for these Adani Group stocks. But let's talk about the other story that we've learned from Delhi. Sources say IT Ministry has prepared a cabinet note on electronic components PLI, which is likely to be sent to the cabinet for approval this week. Ashwin joins us on the phone line with what he's learned.
Well, it's been a long time coming as far as this PLI is concerned, the electronics components PLI. The latest that we're picking up from sources within the government is that the cabinet note has been prepared and that it will be put forth before the cabinet. It will be sent up to the cabinet for approval. Now, this has been a long time coming. There's been a lot of speculation. There's been a lot of conversations over the last 3 to 4 months over the nature, shape and form of this PLI scheme. Let's break down the details. Now, as far as the details are concerned, the PLI, as the name suggests, is aimed at electronics components like batteries, displays, PCBs. That's the main thrust of this electronics PLI. In terms of what the outlay looks like, but we're given to understand that the figure in mind that the government has put forth is 25,000 crore rupees. That's a large figure, but not as large as what the industry had sought. The industry had made a pitch for 40,000 crore rupees. The concern, however, is that the government is now saying that they're okay with 25,000 crores for now, and they're open to some amount of flexibility to increase the outlay at a later date should there be an overwhelming response from the industry. So 25,000 for now can go up even further. As far as what the likely investments are, well, the government is estimating that this PLI could attract investments worth over 40 to 45,000 crore rupees. So that's the kind of figure that the government is working with. The government is quite clear. It's excited. It's keen on the mobile PLI that has performed well. Now it is hoping that this PLI will bring in the ecosystem here, the components ecosystem, and thereby adding for more localization and value addition here in India.
Thank you, Ashmit, for those details. Deven Choksi, Managing Director at DR Choksi FinServ, is now with us on the show. Deven, Dixon, Amber, Sirma, any of these, Sirma SJS, any of these EMS companies which look attractive to you?
Yeah, good afternoon, Rima. Well, I think those companies are doing fantastically good job as far as I think the business and the model is concerned. And they continue to grow well. I think that is a good part. However, I think all of them, though the price correction has taken place in most of them in the last 2 months or so, I still believe that I think they are adequately priced or fairly priced given the prospects that they are assuming. Even if one has to assume that the PLI scheme benefit has to go to them, probably I think they are fully priced in at this point of time, I think, on the possibilities. So wouldn't be in a hurry to buy any of them. Maybe I think the market always gives an opportunity, I think, when the price correction takes place, and if not price correction is enough, I think that's probably the time correction in which I think these counters can be bought, but not immediately, as in my viewpoint.
No, absolutely. And that's an important point. Just a quick word on just one name, Capri Global will come up on your screen. You know, I think it should come up. It's down 15% actually right now. It's the number one volume-led gainer, loser, beg your pardon. Number one, humongous volumes right now. And the day high today was made at about 1240 or so. The high was about 230. From 230, the stock's now at about 166. I'm not sure if there is any news flow that I missed, but that's a big casualty which is coming through right in the top of the sort of losers kind of list coming through. Have you ever looked at this one, Devin? Any thoughts?
Not really, Prashant. I haven't seen this company.
Okay, from the day's high, it's down 28%. Oh boy. The entire auto space, Devin, any thoughts? Sona.com is down some 7% as we speak. I mean, we've been talking about the others, Samvardhana, Motherson, Tata Motors, etc. But any thoughts?
So Tata Motors, I think, maybe slightly a concern, largely because of the JLR portfolio, but not the domestic portfolio of passenger vehicle and commercial vehicle, where this kind of tariff impact, I think, directly affecting them. In fact, I think I would remain relatively more optimistic on the possibility of Tata Motors probably getting the advantage of some global manufacturers shifting their base into India, and I think this company aligning with them. That is a good possibility on which I will remain a little bit more optimistic on that particular possibility. But the auto ancillaries in particular, I think they may probably see some kind of adversities in at least near future, if not for full, because I think their exports to the European Union, and I think that may come into trouble if the European Union finds themselves in a tough spot because of the hike in the tariff on their vehicles. So that is where probably I think your exports might come under some kind of a threat. Not completely sure. This is only a guesswork at this point of time because none of the companies are ready to even speak on this particular subject. But I would think that domestic market story is not changing any which way. It is basically, I think, going to remain firm as I see it. One will have to be a little bit more careful and selective because the market momentum can swing the price in which way. So I would like to wait for a little more time to buy into some of the quality names like Tata Motors and companies like Bajaj Auto.
You should also keep your eye out on the auto ER&D companies, the tech companies which service many of the global auto OEMs, because if there is pressure on account of tariffs, will tech spends get impacted? So names like Tata Tech, Tata LXC, KPIT Tech. So for Tata Tech, for instance, Tata Motors and JLR are the anchor clients. So you should watch for even these particular auto-related IT ER&D companies for any sort of an impact. Today the big mover is actually Wipro, and they won a large deal, £500 million. And they won it from a company which has traditionally given or is doing a lot of work with TCS. It's a big deal, and it's the second big deal under the new management. It's had a few false starts. A couple of times it showed a lot of promise, but then after two good quarters, the third quarter disappointed in terms of numbers. Where would you stand on Wipro and the turnaround that it's undertaking?
Well, yes, a distinctly good possibility for turnaround. I think they are right on course as I see it. However, whether it is all translating into higher amount of numbers immediately, my guesswork or my answer is probably no, because I think that part, I believe that I think is going to take some time. Good part is that I think some of the large contracts are already coming in, and that is, I think, a very good point to observe here. Maybe I think if this particular situation accelerates further, and I think many of the IT companies also starts receiving the larger orders, then probably I think you're likely to see surprise in some of the IT companies' stock prices going forward in financial year 25-26. So keep an eye on that possibility. As I see it, I think it's a distinctly good possibility going forward.
Rima, the other autos are down, and sorry, just going back to the other one. But these sector-specific tariffs, right? The other one is Pharma.
Pharma.
And the index is down about 1% or so. And he's, Trump has said many times that tariffs, Pharma is also in his sort of crosshair in that sense. So who knows? Shireen asked Eli Lilly's CEO yesterday on tariffs. He said, well, for their business, because they're an innovator company, it doesn't matter. But for generic companies, if the tariff is imposed, which is what most of Indian companies do, it is going to push up the cost for US consumers in that sense. But I think it's again brought the spotlight very much on sectoral tariffs. There is overall tariffs and then there are sectoral tariffs as well. Are there been any thoughts on the pharma space?
So, Prashant, I think I probably would like to believe that most of the Indian pharma companies are very well positioned into the US market per se. Even if one is to assume that I think a fourth of the total business goes to US market in form of exports in general. I believe that I think they are likely to remain firm on that path because it's an essential product, definitely going into the market where it is a requirement. And I don't think that I think any kind of a tariff mechanism, any country would ever disturb them. So from that perspective, I remain relatively more confident about the prospects going forward. Maybe I think we'll have more clarity coming up as we travel 2nd April and thereafter, in which I think we'll come to know about how exactly the tariffs are going to be implemented. But we remain relatively more confident about pharma as a whole because of, I think, whatever the market sentiment is. But I think we remain fundamentally comfortable with most of the companies.
You remember the conversation with Lupin also? They had spoken about how, manufacturing in America is almost 8 times as much as, manufacturing in India. So if there are tariffs, they perhaps will just have to pass it on because it makes no business case to manufacture in America.
No, that's a strange thing. You very well make a case that, well, this doesn't just make any sense. Why would they do it? But then you also go back and read those comments about, in the State of the Union address, Trump said, well, we should be ready for some short-term pain. So is this a short-term pain? Who knows? So uncertainty at this point.
Uncertainty. All right, let's get to the other related story. Sources tell CNBC-TV18 that the Prime Minister's office, the Commerce Ministry and the MEA officials are in active discussions to consider tariff cuts for the US. Tim C is here with the details. Tim C.
Well, yes, as you rightly said, sources have told CNBC-TV18 that the top officials from the Prime Minister's office, Commerce Ministry and Ministry of External Affairs are in active discussions to consider tariff cuts for the US. The government is undertaking a comprehensive review of the current import categories, and sources, however, told us that there is no final decision that has been taken so far, but the government is looking at a host of categories where this review will actually help them finalize as to what could be the tariff cuts that can be offered to the US. Now, according to sources, some of these categories could include medical and scientific instruments, cruise ship, aircraft, spacecraft, cars, turbojet and propellers, high-end jewelry, gems and jewelry, footwear, plastic polymers, organic chemicals. And just to remind our viewers, the basic custom duty, say, for example, on cars is 100%, which is levied on cars priced at above $40,000. And those below $40,000 see a levy of 70% currently. So these are the basic custom duties on whole host of these categories which are under review. And also, to adding a perspective here, the total goods imported by India from US in the calendar year 2024 stood at $35 billion, which is 6.7% higher than the imports in 2023 calendar year. Now we'll have to wait and watch for more developments on this front, especially as to what is it that India offers and how soon, and in return, what it gets from the US.
Absolutely, and many of these sectors will be, I think, closely watched. In terms of actual listed companies in each of these spaces, I'm not sure how much is there. There are a few companies everywhere, but medical instruments, aircraft, but again, will this make that much of a difference? Is the question that one needs to ask. The sensitive subject is, of course, agriculture, where tariffs, the different tariff differential are some of the highest there, but then that gets into a different realm altogether. But these are some of the sectors, as Timsy pointed out. Devin, what do you make of it, the story, and anything comes to your mind in terms of implications?
Not really, Prashant. We've been trying to put across our thoughts in different companies and have been trying to even understand from many companies. But I believe that I think not everybody is clear about it, and they are right so, because I think they are not yet clear in coming out with, I think, how they're going to implement the tariffs. So I would rather like to wait and see how exactly things pan out. But I don't see immediate threat to of the direct impact on many of the companies at this point of time. Maybe some of the indirect impact, I think, which might come on some companies which we have not been able to figure out. I think that could be the area where one would give a little bit more concern about. We'll evaluate it, I believe. I think we don't have immediate answer to it, but we are evaluating as a team right now.
Naveen, thank you very much for joining us this afternoon. We will slip into a break on that note. We'll come back and get chatting with Pramod Gubbi, co-founder of Marcellus Investment Managers, on the other side.
Okay, welcome back. You're with us here on Closing Bell. 120 higher on the Nifty, 23,600 plus is where we're at. We have Pramod Gubbi now joining us, co-founder of Marcellus Investment Managers. Pramod, speaking to you after a while. Thank you for your time. Prashant here. You know, I was reading some of your views. Private financials is where you find a lot of comfort. I think that view, in a way, kind of sort of remains unchanged. What else? I mean, let's just start with actually private financials and what's the view? Because you are going to, on the 9th of April, perhaps we're going to start the first of maybe a few rate cuts from the RBI. Commentary from corporates, etc., that we speak to regularly for Jan to March has not been all that great. It's going to be another slow quarter. A rate cut hits margins. At the margin, what's the push factor here of private financials?
We've been recommending private financials for a while now, and a large part of the reason was the more reasonable valuations that they were trading at rather than superior growth prospects. In fact, there are pockets in the market which have equally good or better growth prospects, but most of that was priced in. to that extent, prefer private sector financials, and it's done well, really. I mean, it's no longer that attractive, but I reckon it's still one of the few pockets which is trading at reasonable valuations, and that remains the primary reason, particularly in a market environment like this, where there is immense amount of uncertainty, both in terms of domestic macro as well as global macro. You would need that extra buffer of margin of safety from a valuation perspective. And I would think even after this outperformance, private sector financials still remain one of the few pockets with reasonable valuations.
There have been, banks, right? Large banks, because if you go down the curve, there have been lots of accidents as well. So it's a tricky zone. It's not all clear.
No, absolutely. I mean, quality is imperative. I mean, for us as a house which focuses on quality, I mean, that's on a cross-cycle basis, but I think market as a whole is already looking at quality, particularly in a market situation like this. I mean, this is nothing new. It always happens. When there is fear, people migrate to quality, and quality is clearly delivered. Not just in private sector financials, but across the board, but more so in private sector financials, because totally by your point that not everything needs to be painted with the same brush. Banks which have delivered consistent growth, consistent asset quality, particularly over long periods of time, will be sought after, and that's what the market is showing.
Pramod, hi. Afternoon, Reema here. Have you all done any analysis of Trump's 25% auto tariff? What's the advice if someone holds Tata Motors or any of the auto ancillary stocks in their portfolio?
I think there's very little exposure amongst the OEMs other than Tata Motors, and that too through JLR. To that extent, yes, I think the market is clearly reacting to that effect. Outside of that, I think OEM exposures have been fairly minimal. On the component side, I think there have been a couple of names which are disproportionately exposed to the US. But I think even we are waiting for the fine print to understand how exactly the component makers are exposed as opposed to the OEMs. But clearly, like I said earlier, this is going to be weighing on the market. Today it's auto, tomorrow it could be something else. But that means that uncertainty is the order of the day, which also means you need to have that extra comfort in terms of valuations through a margin of safety across the board, not just with autos.
No, got that. Well, I think you like commodities as well, Pramod?
No, I mean, we don't generally look at commodities.
Yeah, that's what I was thought. I thought because you've largely been in things, not in commodities in that sense. What else? Specialty chemicals is another area which has come up in conversations now and then with people here. Maybe a sector which has been down in the dumps, maybe turning at the margin. Or anything else top of mind really for you, Pramod?
Yeah, I mean, specialty chemicals is clearly, had a tough last couple of years just when the market was doing really well. It is making a comeback, but I would recommend caution here because unlike the 2018 to 22 rally, which we saw in specialty chemicals, both in terms of earnings growth as well as stock prices, this time around, it will be a little more discerning because you don't have China fiddling with its, supply chain because of environmental reasons. In fact, you might have excess capacity coming from China should there be any tariff measures coming from the US on Chinese chemical makers, which could mean for Indian specialty chemical makers who are going head-to-head with China, it may not be a great time. So you need to be careful about that. But there are Indian specialty chemical makers who perhaps will benefit from this regime, where the US might see an alternative sourcing country where the Indian chemical makers could benefit from it. So it's going to be a little more discerning call rather than a broad-based, which is the case with the market as a whole. I think finally we're getting a market where it is a stock pickers market. You'll have to take a more bottom-up approach. There are no obvious themes. There are no obvious places where across the board valuations are attractive. Like you rightly brought up the point, even within private sector financials, there's a clear spectrum in terms of quality, despite the valuation comfort.
Where do you stand on pharma? Last year, the Nifty Pharma Index was the best performing sectoral index. It went up close to about 35-40%. Now, this year, it's facing the heat of potential, tariffs and the threat coming from tariffs. What's the call that you're taking on pharma on the whole? And then if you have any preference in the subsegments.
I think healthcare on a whole, we are still constructive, particularly hospitals and diagnostics. Again, pharma, you can throw in that bucket. Healthcare more from the defensive standpoint, given everything that we've discussed so far. It is an uncertain economic environment, both globally as well as domestically. So you would want some defensibility in terms of revenues and earnings in your portfolio. And healthcare generally provides that. It's not too cyclical. Having said that, I think the pharma sector also benefited from a lot of recovery last year. I don't think anybody should expect similar sort of returns. So more from a defensive perspective, healthcare as a whole finds its way into our portfolios. Within that, we prefer hospitals and diagnostic providers as opposed to, we do have pharma and API companies, but predominantly in hospitals and diagnostics.
No, absolutely. By the way, from your published portfolio, would you want to give us a sense of what the portfolio looks like right now?
So, like I said, we are, as it is, bottom up. We don't have any predominant themes here. The way we are constructing the portfolio is trying to look for either earnings visibility or valuation comfort, ideally both, but in a market like this, it's not easy to find both. And to that extent, we've built enough defense and safety in the portfolio. In mid-caps and small-cap portfolios, we've actually increased cash allocation. That's where we're a little more circumspect, given despite the correction, we don't see valuation comfort in small and mid-caps.
No, is it largely consumer heavy? Is it, where is the, what's this, just a quick sense?
No, like I said, this is a market where there's no obvious theme. So we're constructing the portfolio.
So the top 5 holdings, Pramod?
Yeah, financials, we do have big exposure. We've talked about it. We do have a couple of healthcare names. And that can make up. Of course, consumer has always been part of a portfolio and still remains so.
Okay, we leave it there. Thank you very much for joining us and good luck. Appreciate your time here on CNBC-TV18. We'll just quickly look at the market, which is starting to come off a little bit as we get into the last 30 minutes of trade. So from being up 120 odd points, we are now about 40 points off that level on the Nifty. So not a slight come off, nothing dramatic at this point. Well, we'll take a break. Discover the power of Young Bharat Rising India Bharat Summit 2025, where innovation, ambition and vision converge. This is your exclusive chance to gain insights from global visionaries. Jeffrey D. Sachs, one of the world's most respected economists. Borje Brende, President and CEO of the World Economic Forum, sharing their insights on India's role in a changing global order. This is at the Bharat Mandapam, New Delhi on April 8th and 9th. You can book your passes now.
30 minutes to go to wrap up today's trading session and the March series, which has seen the Nifty gain about 4.5% and the Midcaps gain more than about 5%. The Nifty is currently around the 23,600 mark, a gain of about 100 odd points, picked up a few points in the last few minutes. Mitesh Thakkar is now with us for a few BTST calls. Mitesh, your thoughts on where we could end this expiry and then your stock calls.
Difficult to guess the expiry level, it's always tricky, but on the stock side, Adani Ports is something, which I like. It's come near the day's high. BTST here with the stop at 1188. Look for a target of around 1215. And earlier we had Federal Bank, which did very well. Now I think it's DMart, which is moving towards the day's high. So DMart is a BTST with a stop at 4039 for targets of 4120.
Okay, thank you very much for that. Adani Enterprises, the other Adani Group stock, which is moving up 2.5% higher on Adani Enterprises. Big spike at 3 o'clock, starting 3 o'clock. But let's talk about Tata Motors and the auto component manufacturers like Samvardhan and Motherson, both lower after the US has imposed a 25% tariff on imported autos. Sudarshan is here to tell us the impact.
So it's the one sector which is low in today's trade despite market moving higher, and the reason auto stocks are under pressure because of the announcement of tariffs that came from US President, who announced that there would be a tariff of 25% on all the cars which are not made in the US, and also as per reports there would be tariffs on auto parts as well, and these tariffs would be effective April 2. Now first starting with Tata Motors, why the stock will be impacted. First, JLR has US as one of the biggest markets, and it forms nearly 30% of its total volume. And also the important point is JLR does not have the production facility in the US. So all the cars that JLR sells in the US are imported from other countries. Talking about its impact on Tata Motors revenue, its impact can be of 70% on consolidated revenue, and due to tariffs, it puts risk on Tata Motors revenue of that is 20% plus. Now coming to Samvardhana Motherson. Samvardhana Motherson is not directly impacted, but it's indirectly impacted because it supplies parts to those automakers which exports cars to the US. And here impact is seen in the range of 6 to 7%. Now coming to Balkrishna Industries and Sona BLW, if US President decides to impose tariffs on auto parts. For Balkrishna Industries, 17% revenue comes from the US, and for Sona BLW, 43% revenue is contributed by the US. And last set is, if US government decides to impose tariffs on bikes and trucks, then impact will come on Eicher Motors because 2% of its Royal Enfield volumes come from the US. Second in that list is Bharat Forge, where North America forms nearly 40% of its standalone revenue, and for Ramkrishna Forgings, 26% revenue is contributed by North America. So these are some of the major stocks which might be impacted once the tariffs come in on April 2.
Absolutely. So thank you very much for that. Let's actually listen in to those comments from President Trump on auto tariffs.
We're going to charge countries for doing business in our country and taking our jobs, taking our wealth, taking a lot of things that they've been taking over the years. They've taken so much out of our country, friend and foe, and frankly, friend has been oftentimes much worse than foe. And this is very modest. And what we're going to be doing is a 25% tariff on all cars that are not made in the United States. If they're made in the United States, there's absolutely no tariff. We start off with a 2.5% base, which is what we were at, and we go to 25%.
Okay, that's the big story. But back to the markets then. Earlier today, we had a chat with CLSA's Lawrence Belanco, and he believes the worst is now over for the Indian markets. Listen in.
I think the worst is over. I mean, there were two things we were looking at. One is, in the third, fourth quarter of last year, we had this topping pattern that suggested you trade down towards a 21,800 to 22,800 zone. And that was basically the trading range that you had prior to the India elections in June of last year. We fell into that range. And the big thing that we saw last week that really sort of improved the technical landscape was, one, we broke above the 50-day. And what was different about last week's break above the 50-day versus December's break above the 50-day is that we had this breadth thrust signal. And now what that measures is the number of stocks within the Nifty making new 4-week highs. And typically when that gets above 55%, we have a really good hit rate looking at it on a 90 or 250-day basis, that the Nifty is up over 13%. So, that would suggest that we revisit the highs. We trade back over 26,000 banks as a key sort of relative ratio. And, in the correction that we had from the September highs into the lows in February, that the private banks actually fell less than the PSU. So they did fall, but they fell less. And now that we've started to see things turn around, we've seen that private banks continue to outperform. So, banks have held up relative to the Nifty. That's still a leadership market since essentially the second half of last year when we started to see the improvement in the banks. But, just getting more granular within that banking space, it's the private banks that really sort of stand out. You've seen breakouts in Kotak Bank after being range-bound for the past 2.5 years. You've seen HDFC sort of reassert itself after its breakout, and you've seen ICICI trade back to its all-time high. So, that's a key sort of focus area. And then you've got some of the non-financial banks like Bajaj Finance, another sort of big multi-year trading range breakouts. So that's really where the interest and momentum is right now. If you're looking at just taking the average and what the expected return will be, it'll be over 13% within a 250-day window. We still got 37 to 42,000 as a longer-term upside target for the Nifty. There will be periods, where China rallies strongly and we get some outperformance from there. But, still having a long-term upside target of 37 to 42,000, I do think, India would still be a key driver for emerging markets, but also relative to the global benchmark as an outperforming market and one that you do want to be adding to exposure. And we've got, the evidence, at least now technically, that you want to be buying the pullbacks, basically.
Well, the mid-cap index is picking up. It was nearly flat about 30 minutes back, now up nearly 0.4%. Pull up these stocks. Bajaj Housing Finance, big spike, stock up nearly 9%, rising on good volumes. And now it's managed to erase its losses on a year-to-date basis. That's one. The second one is FirstSource, and that's up 10.5%. Again, it's highly indexed to the banking sector. It's an IT company indexed to the mortgage business in the US. So the street will watch for Fed rate cuts. FirstSource is moving up quite smartly. And then you've got some of these new age tech companies like Swiggy, Ola Electric, also rising very, very rapidly. Sagility too, another company, like a health tech BPO sort of a company, catering to the US, that's up close to about 2.5%. NTPC Green Energy, 3.5% higher. Appears to be all the 3 p.m. expiry-related up moves in individual mid-cap names. Anand Tandon is now joining us in the last leg of this show. Anand, thank you very much for joining in. What have you made of this recovery that we've seen in the last 7 days? Convinced? Have you been buying? If yes, what?
Well, the recovery has been quite strong, obviously. And, does that mean that you see valuations now quite good and therefore there is a growth prospect ahead? Not really. In fact, I'm beginning to get worried about India's growth prospect overall. I may be sounding like a complete bear at this stage. The reality is I don't think we are factoring in the effect that reduced IT hiring will have on the rest of the economy. So I'm actually looking for a downgrade in terms of the overall economic outlook itself, because, roughly for the consumption in India, 50% of that for most practical purposes comes from the people that are hired in IT. That means real estate, that means tourism, that means travel and all of that. And as I see it, that is now coming under severe stress because of the fact that AI will actually cut off the need for hiring a lot of people. Overall, therefore, I think, there is a question mark in terms of where we are going to supplant that growth from. And without that, I think the earnings numbers that we are projecting for the next year are again likely to be too bullish.
Where you are, Anand, GCCs are sprouting like mushrooms.
So let's look at the numbers a little longer term. In 2020, the total number of refresh hires in the industry was 3 lakhs. Out of that, GCCs were hardly 50,000-60,000. Today, the total number of hires for this year estimated is 1 lakh from GCCs. So yes, they are sprouting, but the overall industry hiring net is likely to be 1,20,000. So that's come down from 3 to 1.2. And my assumption is that going forward, because of AI, you will have more productivity per engineer. The need for fresh hiring will come down dramatically. Now, please understand, 50% of real estate office demand comes from IT, the incremental hire. So again, 2020 figures, 3 lakh people hired, which means 3 crore square feet of office space required. Total A-grade office space leased out and sold 5 lakh crores. If you're looking at what's happening in Hyderabad specifically, I can give you some data. Google has been given 250 acres of land by the government for setting up data centers. They have built 50, they are building another 50, and they have returned, or they are wanting to return 150 acres back. Same thing is happening with Microsoft. So, these numbers are something that we are choosing to ignore because of the overall flow of money out of the US. But the reality is that we are not in a good shape.
AI will do the job of engineers too. What will that mean for IT companies? If they need to hire less and the work is getting done, will that not mean better productivity, lower costs in general?
For the near term, yes. There is also a shortage of AI engineers. But like I said, the argument I'm making is not about the margins. The argument I'm making is that domestic consumption, which is largely fueled because of high-paying jobs coming out of the IT industry, is now under threat. And this is something that nobody is talking about for some strange reason, because like I said, it's 50. So today, already over the last 2 years, real estate demand, which was 60% coming from IT, has fallen to less than 25%. In cities like Bangalore, Hyderabad, Bombay, Pune, and Delhi, which I would call as IT centers, almost 40% of footfalls in malls comes from IT employees. So if you're not getting incremental people coming through, the question is not about margins. Like I said, yes, the margins may improve. You may actually have some people being hired who are being paid more than what they are being paid currently. But for every 2 jobs which are being paid more, there will be 8 which are missing.
No, absolutely. And, that IT money has been has I think been the building blocks of boom in so many sectors. Housing, of course, is one clear-cut area, as we've seen in Bangalore and some other cities as well. Anand, stay with us. We're going to slip into a quick commercial break here. Maybe, as Anand says, more discussion and reflection needed as this is sort of gathering pace with given developments in AI, etc. We'll get you some more opinion. This is about, of course, tariffs, which are upon us. Sunil Kaul, emerging market strategist at Goldman Sachs, with his thoughts.
I think if you just looked at the rate purely on the basis of product by product weighted average reciprocal tariffs, which is that if US matches sort of India's tariffs on each of the products, that effectively is about 11 percentage points of higher tariffs on India. But then I think we also have to keep in mind that the number could be a bit higher because of non-tariff measures like subsidies and import bans, and there are also kind of VAT. And so there is a lot of uncertainty whether the US does include VAT, does not include VAT. Europe is obviously a large risk there as well. So depending on what the number could be, it could be north of sort of pure 11 percentage points, which is based on the weighted average tariff rates. Our sense is that it could still be an initial shock, as I said, because the numbers will be higher than what the market is currently anticipating. And then there is a room for negotiation. There's a window for each country, in which case I think there will still be sort of uncertainty in the market. Agri has the largest sort of tariff differential if you do sort of US versus India. So that could be impacted. But we think, for example, like pharma could be an area that could be impacted as well. Autos, in addition to the reciprocal tariffs, we also think that overall in the tax measures, you could see a global sort of auto tariffs. You could see tariffs on critical imports. And when we think about critical imports, electronics and components is one of the things the Trump administration has talked about. Our general sense is that on the domestic side, your growth has kind of bottomed out, but it's still sort of going to be a gradual recovery in here. You still have policy, especially on the fiscal side, which is somewhat restrictive. We still have earnings cycle, which is still seeing more downgrades than upgrades. So we still think there is a couple of quarters of downgrades left. We still know that small and mid caps have much higher valuations, and the positioning there is still not cleaner, especially within the domestic funds, right? So there is still sort of more risks on the domestic side, even though I think the worst is behind us. And so because of all of this, we still think it may be a little bit too early to take broad-based exposure in the market. So we are somewhat sort of cautious in the near term. I think we are kind of much more sort of alpha focused, looking at companies and sectors where you got sort of higher earnings visibility, more stronger balance sheets, and sort of more quality bias. I think that's how we're kind of leaning within our sector allocations, within our stock ideas.
Or does it feel like, where did the last 10 years go?
When you're on a treadmill, you're running so fast, you forget how long has it been. So it's been that kind of a journey.
Between then and now, of course, 24 to 34, suits, I can see both of you are dressed in suits now.
When we started, we used to wear t-shirts and used to go to bank branches and ask for payment gateway. At some point, we started keeping beards as well, right?
We used to stay together till at least 3 years back, 2 years back, 2 years. Yeah,
3 years back.
And then what? You decided some separation
We
is
got married. So I still spend a lot more time in Shashank outside work than I spend inside work.
He's responsible for all things tech, you're responsible for all things business. So that's how the separation has worked.
That's the broad boundaries. And we have a principle internally in the company called disagree and commit. That once you have decided and you fought, you have put your best effort, and we decided this is the call that we are going with, then you disagree and commit to it.
Who's the more aggressive of the two of you?
We have a joke in the business team that if you come to Shashank and say, hey, we have done this, he says, congrats, how do we do 2x next time?
Okay, welcome back. We've been in conversation with Anand Tandon. 100 points higher, by the way. 23,588 is where we're at. Anand, two names, Bajaj Housing Finance seeing a big move. Aadhar Housing, I saw a note from DAM Capital, 5.5% move. Any thoughts here?
That's one of the most stable spaces, obviously. And given the fact that, supposedly the affordability is actually better now than it was 5 years ago, that's an area that will continue to grow. Obviously, housing finance is also the lowest margin. So if you are looking for companies that you want to buy, you should be looking for those which will have the lowest cost of borrowing. And I would imagine that, besides the bank, something like Bajaj would probably be the better bet.
Some of the PSU banks are moving up. Bank of Baroda, PNB, Union Bank, all these spiking up as we speak. So, Anand, what would you recommend buying, at this juncture, given your view on the economy, the slowing economy, and how, job losses are going to hurt now?
So right now, purely from a financial point of view, obviously the only sector which looks somewhat relatively cheap is the banking sector. And there again, I would favor some of the private sector banks more because their liability side are usually better done, though some of the public sector banks, especially those like SBI, etc., have now started doing quite well in terms of the technology. For the rest of it, I'm not sure that there is much of a case to be made, especially on the valuations. If you're looking at pure order book, yes, CapEx will do well for the next few months. So will defense. Now that HAL has started getting engines, they can actually start putting out some planes. But other than that, I don't see a compelling reason to be rushing in to buy in almost any of the sectors.
Any thoughts on BEML? 15% surge today. So low was about 24. 2350 actually was the low on the 3rd of March when the market also made a low. 3100 today.
I don't, I think you should ignore many of the market moves because there is a bit of FOMO that is happening. And again, the question is many of these companies are not necessarily ones that will benefit from anything specifically other than the fact that, there is a general move back towards small and mid cap. That's a sector which I continue to remain somewhat skeptical about. But, I don't have a specific comment on BEML. I'm just saying hold your horses. There is no need to rush in and use up all your cash.
By the way, Bajaj Housing, Hormus tells us, is a Nifty Next 50 inclusion. So according to Nuvama, it could see inflows of $17 million.
Some chasing happening there maybe. The other one is AG's Logistics. As a business, you have a view there. Again, big move. Low was $600. Stocks at 900 plus now. It's got the same view as BEML or anything? A business view, Anand?
No, I don't actually.
You don't? Okay, all right. Fair enough. We'll leave it there for now, Anand, but stay with us because we'll talk more in markets forward. Just wrapping up things in terms of where we are. 120 points higher is what the Nifty is looking like, 23,600. And the sectoral lay of the land is up on your screen. PSU banks are up 2.6, real estate 1.7, oil and gas is up 1.6, metals 3/4. Actually, across the board, there are gains upwards of 0.75% at least. Private bank index actually, if anything, is up only about 1/3% or so at this stage. I don't think we've really brought up what's happening in the PSU bank space at all. So maybe I can just quickly look at what really moved here.
Big moves.
Bank of Baroda 5%. PNB is up 4%. Union is up 3.5%. Canada Bank is up 2.5%. And Bank of India up about 2.5% as well. So yeah.
Well, that's what was up. What was down were the auto and pharmaceutical names. So Tata Motors, top loser, 5.5% down on Tata Motors, 670 in terms of a closing level. Eicher Motors exports a very small percentage, but that got impacted today. M&M too, weak in trade, ending in the red. Pharma names like Sun Pharma, Apollo Hospitals, Dr. Reddy took it on the chin, and Bharti Airtel was another drag. The mid-cap index ended with a gain of nearly 0.5%. The advanced decline ratio split evenly down, right down the middle. Gainers include a Bajaj Housing Finance. You had an Ola Electric. We had GAIL, which also saw pretty good volumes. Then PSU banks that we spoke about. RHSI, Magnesita up and about. On the way down,